Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at EWOTrading.com with your Pro Trader tip of the day. And it's working with smaller accounts. What do we consider a smaller account? Usually that's around a $5,000 to $10,000 account, all the way up to $20,000. But we here in our publications use that $10,000 account number as our basis for many of our trades. And so what we focused in on are accounts that would be appropriate for that size of a trade. Okay. So what we're looking here is our Delta Neutral breakout publication. This is trade ID 1418. The stock is Pinterest. Pinterest had earnings just last week, and you can see here the entry date was on February 6th, and we did one contract, and you can see here on this particular strangle, this would be a strangle. The debit here is $426. Now, on a $10,000 account, that would be a 4.26% risk on portfolio, which we seem to be very appropriate. We like to do 5% or less. That meets that criteria. But if you were using a smaller account, like a $5,000 account, that would be over 8.5% risk to portfolio. That's a little bit bigger. But why would that? You might consider this. Well, the thing about straddles and strangles is even if the stock doesn't move as much as anticipated, there is also some minimal risk in the trade because we still have a lot of time to expiration in our options. And so that helps offset the risk a bit. So maybe you do only lose 3 or 4%, even if you were trading with a smaller account under $10,000. But for this, we're using that smaller account range goes up to about 25,000. And then over that, we get into the medium account sizes. But for here, again, $10,000 is our hypothetical, and you always want to use good money management. Now, looking at the trade itself, the strangle, okay, again, two different strike prices. Same expiration cycle, same stock. Okay, so Pinterest, February 14th with the expiration. We used the 34 calls and bought the 33 puts. The flat bottom here, you can see that. What we want is a big move out of the stock. We were heading right into earnings. And so the exit instructions were sent out on the following day on February 7th for a total credit of $6.15. Let's take a look at here. You can see the chart on Friday, February 7th. Look at that gap up. The stock was popped almost 20%, in fact, over 20%, and began to sell off. So we took our exit here at $40.21 was the price that we took our exit. And that generated that credit that you see here of $6.15. And what that results in was a $189 profit per strangle. Okay. So if you were dealing with a bigger account, maybe you did 5 of these or 10 of these or whatever, and you multiply that 189 times that number. Okay. This was a 44.37% return on risk in just one day. Okay. So going into earnings, we were looking for that breakout. We got it with Pinterest, a big jump over 20%, profiting 44% on the exit in just 24 hours. So that's your pro trader tip. Remember, watch your risk when you're dealing with smaller accounts, really any account size. You want to make sure 5% is a good recognized number. Don't risk more than that. Stay in the game. Keep on trading. Everyone have a great trading week. Take care.